Saturday, October 21st, 2023, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at the only thing we can be certain of, in my opinion, and that's that the powers that be are going to continue to trash our currencies, our national currencies, and they're going to use crises as an excuse to do so. Before I start, I'd like to make a few announcements. First of all, today would have been my father's 91st birthday, Mario Sr. He was born in 1932, passed away in 1998, and yes, growing up, we had our arguments. I tried not to listen to his advice, but I would say if it wasn't for him, I wouldn't be the person that I am. And if it wasn't for him, we wouldn't have Monaco 64, because that's the nickname he gave me, Monaco. The day I was born, actually, because I was named after him. So in order to differentiate, he gave me a nickname. He liked giving nicknames. Anyway, the other thing is my right eye. You might be thinking, what's happened to your eye? Well, you know, I had an operation on September 8th for glaucoma. It's called a trabeculectomy, and it went really well, but there's a little leak in the eye, and it was healing. It was diminishing the leak, but the doctor thought it would be good, or the surgeon, to do another surgery to stop the leak, and that was successful. We did it yesterday, and that's why my eye is a bit like I was punched by Mike Tyson, but it's going to get better. And what's the other announcement that I wanted to make? Oh yeah, just wanted to let you know, if you don't know already, that I have an affiliation with the Dirty Man Safe. I think in these troubled and uncertain times, it's always good to have something to keep your dearest possessions safe. And I recommend the Dirty Man Safe. And I have a promo code with them, Monaco10. You get 10% off if you buy a Dirty Man Safe. All the details are below in the description. I think right now they're only shipping to the US, but I think the owner of the company is trying to figure out a way to ship to the UK. So you can stay in touch with them. Yeah, as I said, all the details are below in the description. So back to the only thing we can be certain of. Yes, that our currencies are going to continue to be trashed. And why is that? Well, in my opinion, we're still run by statists, people who are in power not for the benefit of the public, but for their own benefit, for their cronies' benefits. And in such a system, a sound money system doesn't work, because they're all corrupt. And they need the control of the currency, of the fiat currency, to effect, their largesse, their financial largesse, to pay people off. And of course, we've gotten to a point where the debt is becoming unsustainable. And why is that? Well, because the fiat currency system is backed by debt. And if the debt doesn't increase, the system collapses. And these powers that be, the political class, the statists, the corporate cronies around them, they lose their power. So they're desperate. They've been desperate, I would say, for many years, not just since the beginning of 2020. I would say it was after 2008, after that crisis that almost blew the system up, blew the banking system up. And once the banking system goes, the currency system goes. So they're able to kick the can down the road. And I think this is the final kick. They're going to continue to kick the can down the road. And that's why having learned about this system, thankfully, back in '02, I've been able to prepare myself, of course, through stacking gold and silver, because gold and silver historically, for thousands of years, have been the only money that have kept their purchasing power. Fiat currencies, of course, always go to zero. So I wrote an article recently for a magazine here in the UK. I'm going to post it onto my Maneco64.net blog in a few days. But basically, I'm talking about the fact that the 2020s is a decade of crises, and each crisis gets worse, and under each crisis, the powers that be have to spend more, and they have to borrow more, they have to print more, and the only thing we're certain of is that the currencies that we're forced to use for day-to-day transactions, for tax payments, they're going to get worth less and less. Of course, the general public is going to be the one that's the most hurt. The very wealthy, the ones near the top, they can always, how can I say, profit from these situations. Yeah, profit, and do very well because they have a lot more assets. They are able to borrow at much lower costs, and they're able to play the game. And I'm not saying I'm one of those. I've just been fortunate enough to learn about this and try to protect myself, my family, friends, people around my community, so to speak. And this is what I've been trying to tell people. If they want to listen, it's up to the individual, of course. But I think, we need to be aware that all these crises, and I wrote about what happened in 2020 with the COVID crisis, then the Ukraine crisis, now the Israel-Hamas crisis. And all these crises, the thing about these crises, it changes people's psychology. The other thing it does in relationship to the powers that be in the state, and I have to quote, I forgot his name now, but I'll find out. But basically, this individual said that war is the health of the state. And I think that's what's going on. It's not just the kinetic war now in Israel and Ukraine. It was the war against us during COVID. And they need these crises, or else people are going to start asking questions. Have you noticed how no one's talking that much about the Ukraine anymore, let alone COVID? But as I said, one thing's for certain. They're going to keep spending, borrowing. They're going to keep finding excuses. And I think the proof is in the charts, which I'm going to look at today. And the first couple of charts are actually a little different. And I hadn't thought much about these charts before. But due to the fact that U.S. Treasuries are losing value at a rate of knots, the base of the fiat dollar, Treasuries are on shaky ground. I've decided to look at these securities in terms of gold. Instead of looking at XAU USD, I've looked at XAU USD versus the 2-year note future, which is like not a very short-term bill. Well, it's a note, but it's also not very long-term. And bonds basically are dollars that will be paid back in the future. So comparing the price of gold to those is not very different than looking at the price of gold today, which is the spot price that we look at every day. So this first chart here tells you how much you can get for an ounce of gold in terms of the 2-year note future. And you can see that for over 20 years, the trend has been up. So you're able to get more and more U.S. paper, two-year note futures. The reason I use futures is because the two-year note, after 2 years, it matures, right? And then you have a new one. The futures keeps continued price over the years. And that's why I use the future. But as you can see, we closed at an all-time weekly high. So that means that gold is very strong versus, US stat. And usually, and many people have said, well, when the Fed starts raising interest rates, gold is going to collapse. But no, in this case, it isn't. And I think it's because in this case, the Federal Reserve has made a huge blunder. They kept rates and they printed too much money for too long. And now they're paying the price. And that's what we're seeing. And what gold is saying is that the Fed is way behind the curve still in terms of reining in inflation. And what it could be telling us as well is that the Fed will get so desperate that they're going to revert to cutting rates again and doing QE. And that might help U.S. Treasury securities, but it's going to help gold even more. So you can expect this chart to keep going up. And then I did the same with the 10-year note future. And that one's doing even better. Well, and that's because it's further away from the spot prices, 10 years ahead. So that's another signal there that U.S. Treasuries are not the place to be. And again, politically or ethically, if you think your government, be it in the US or in the UK or in the EU, wherever it may be, is doing the right thing, go ahead and finance them by buying these treasuries or other government bonds. I'm going to stay away from that game because you don't want to finance the people that are doing the most to make your life difficult. The other chart that I've talked about recently is the yield spread between the 2-year note yield and the 10-year note yield. Usually it's a positive spread because you get more for your money if you lend it for 10 years than 2 years. But there are a few times where it goes negative. We have an inverted yield curve or a negative 2s, 10s yield spread. And every time that happens, as you can see here, well, in the last 30 years or so, every time this has happened, once this spread bottoms, within 4 months, we see a recession or big trouble, some kind of crisis. The only time it took more than 4 months was back in 07, 08. It took 9 months. The other thing that Charles Nenner even said is that once we get to zero again, once the curve re-steepens, you can be sure that that's when things kick off. And as you can see here, when I first spoke about this, I think this spread was around minus 48. And this was only a couple of weeks ago. And now we're at minus 16 or minus 15.9. So I think we could get to zero very easily by November, which would be 4 months from the bottom in July. So I think things are going to get even more interesting in terms of the economy and the markets in the next month or so. Am I worried about it? No, because you shouldn't. That's the other thing. The powers that be, they throw all these crises at us, and I know they affect us. They affected us greatly in 2020. They kept us locked in our houses for 240 days here in the UK. They affected us through higher utility prices. Once the war in the Ukraine kicked off, even though utility prices and inflation kicked off before the war, but it accentuated it. So I think what's happening now in the Middle East, unfortunately, could make things even worse in terms of the purchasing power of our currencies. And I'm not even going to go too much into the question of World War III. And there might be some kind of big conflagration. And again, it will affect us, but I wouldn't fear it. Don't let them put fear into your mind, into your heart. Just try to live your life. Be, I think, good to each other. That's all we can do, really. So now I'm going to show some more charts. And these are, of course, charts that you've seen before. These are the price of gold in all the major currencies. And I've started warning people back in 2007, even before I had a YouTube channel. And at the time, I was still working in the city of London. And I did this on a private basis. And I wrote an article about how all fiat currencies were sinking, which is, you can still find it here. There you go. I'm going to put a link to it below in the description. So I always find it good to look at these charts because it shows that gold, for example, has closed at new weekly highs in many of the major currencies. So let's go through them. I've got here the price of gold in Swiss francs. It's not at an all-time high on a weekly closing basis, but it is above the 2011 high, and it has bounced off that level, as you can see. So even the Swiss franc, which is the best of a bad bunch, is getting debased. And debased, I mean that gold is buying more and more of these currencies, and these currencies are buying less and less gold. And that, my friend, is inflation or currency debasement. So now the Japanese yen. Well, there you go. The Japanese yen is almost at 300,000. The price of gold is fetching almost 300,000 yen. And that line there is quite interesting because there used to be like a resistance there and it's blown right through it. So Japanese yen looks very precarious, or gold looks very strong versus the yen. Then I've got the euro. The price of gold, new weekly closing high in euro. And this might be lower than the all-time high because this is a closing price. But it just shows you that this trend is not just it's a trend that's happening against all fiat currencies. That's how you need to look at gold. It's the other side of fiat currencies. It is a commodity, but it's a monetary one. So let's go to XAU GBP, British pound one. And we're right near there. I think we closed at a high. I think the other high there was back in March this year. And the intraday high, just to let you know, is 1648. And there seems to be a very good trend line there too. So now let's look at the Canadian dollar. Canadian dollar, fairly similar to the British pound. We're near the all-time high there at 27.16. That's a weekly closing price. I've brought up the Swedish krona because the Swedish krona is part of the dollar index. Well, there's no argument there. That's an all-time closing high. For the price of gold in Swedish krona, it's almost at 22,000. Then we have the Aussie dollar. That's another big confirmation there. All-time closing weekly high, just below 31.50. And the Aussie dollar's cousin, the Kiwi dollar, same thing, almost at 3,400. And now the Indian rupee. Yeah, Indian rupee, nothing different. It's still below, I think, the March high, but I think it's only a matter of time until gold goes to new highs there. Same thing, well, the Chinese yuan, that's a big confirmation there. We're almost at 14,500. And last but not least, let's look at the price of gold in US dollars. Well, I think the important thing here is that we're staying above that 2011 weekly closing high. You can see that it dipped there below that level recently, but has come right back up. And I think yesterday the high was 1997. And I think we just have to sit and be patient and wait because all the indicators are telling me that there's trouble ahead economically, financially, geopolitically. And when that happens, the powers that be, they react and they change tack. The tack right now is against the wind, so to speak, trying to rein in the inflation that they created themselves. But I think they're going to have to turn 180 degrees very soon. So there you go. If you enjoyed this video, make sure you hit the like button. Make sure you share it as well. Make sure you subscribe if you haven't subscribed to my channel. And with that, I'm going to wish you all a very good weekend. Take care. Bye.